In today's video, we're having a look at Nikola and some of the fraud allegations. From there, we're going to move on to what's going on with the S&P 500 and the NASDAQ and why there are some people buying the dip. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing I'm looking at today is over the SEC probing of Nikola. They've had some fraud allegations recently by a well-known short seller, Hindenburg Research. Hindenburg have basically accused Nikola of defrauding investors or at least overstating the abilities of their products. Now, of course, at the notice of this information, we've heard shares have dropped 11.7%. Now, the interesting factor, I did report about Nikola maybe about a week ago, and to this date, they still have no revenue and they are still a little bit worrying about their stock price. At one stage, their stock price was worth more than Ford. Yet at no point this year have they actually produced a working car. And so that's where some of these fraud allegations are coming in, saying that they are not providing some of the details. The fraud allegation that's in question is actually looking at the truck that you can see on the image behind me. There is a video of it rolling down a hill, and I use that word very well articulated, rolling. The allegation from Hindenburg Research says that that has got no way or shape or form of powering itself, and that it is simply rolling down a hill, basically in neutral. So that does cause a little bit of concern, and it makes me wonder if GM will go through with the deal that they've sort of set up in place, which is rumored to have been in the cost of about $2 billion. So we will have to keep a close eye on that, particularly because of Nikola's close ties to Tesla as a rival. Now, moving on, a lot of people are buying the dip in the NASDAQ. A lot of investors, a lot of traders, and the best way I can show you of its evidence is in this leveraged ETF. Now, this is the TQQQ, if you want to look up the ticker code for it, but it is the ProShares Ultra Pro QQQ ETF. Now, it is a triple leverage ETF, meaning that you have triple the amount of buying power you usually would when you go into it. And since its inception in 2010, they have made 10,000%. Now, in the last 8 days, they have attracted $5.8 billion of investment. Of course, of that, 24,000 are Robinhood accounts. So we know that there is a lot of contention, or at least a lot of interest in Robinhood accounts because of their retail nature, no commissions, and relatively cheap pricing for purchasing. Now, of course, when we see that sort of information, it does signify that there is likely investors planning on buying this dip that we're seeing right now, particularly in the NASDAQ. So that information then says to me, perhaps we're looking that the NASDAQ might rise a little bit or even reach its previous highs that it was at before. Now, moving on to jobs. The Philly Fed, which, if you know a little bit about them, obviously do a lot to do with jobs reporting. And they are a part of the Federal Reserve of America. Now, what are they looking at specifically? They have what seems to me to be a little bit concerned. They haven't outright said they're concerned, but to me it does sound like some concern, particularly because the current plan of the Fed in general is to try and improve employment conditions. Now, what it looks like to me is that there is likely going to be permanent layoffs for a much longer period of time. The Philly Fed have conducted a study that goes through the idea of the pandemic and how many companies are looking at automating or providing robots to do some of the work that previously they had employees doing. Now, the research suggests, as you can see on the chart behind me, that we've got less teleable work, hard-hit service sectors, and of course, high-risk virus transmission areas such as meatworks and factories are going to be running into trouble where they might decide to move it to automation to reduce the transmission of coronavirus. And of course, then they are likely going to end up with job situations where they're not going to need to rehire the employee. Now, naturally, you can think about this in one of two ways. Those companies might end up having an improvement in their stock valuations because all of a sudden their efficiency and their quotas have probably improved. Naturally, there will be an outlay in cost for all the machinery that's required and the sort of software side of things to get it all running smoothly. But once that goes on, it doesn't really change too much in their outgoings. So we have to take into account that we might see an immediate drop in the value of the company whilst the purchase of assets goes up. And of course, they would then theoretically be more efficient, be able to produce more goods, and therefore sell more goods, which is good for the business itself. But for the economy, you've got a different side of this to look at. You can see them obviously not having more jobs in the economy means less people working and less revenue for the general economy as a whole. And less people spending money because they don't have it. So that is something to really consider over the next coming days, and particularly when we see jobs reports coming out in the near future. Now, moving on from the Philly Fed, I have been looking at the Aussie dollar. Now, the Aussie has continued its sideways movement that we've seen from last week. It's had a bit of a quiet period, and from what I can see here, we are seeing lower highs and higher lows, indicating that we've got a little bit of a triangular shaped pattern occurring right now. I would be starting to look for a breakout opportunity, particularly with the monetary policy announcement that is due out later today, or at least the monetary minutes, I should say, I'm sorry. But regardless, keep an eye on that. The Aussie dollar will have some level of effect, and naturally we have to keep in mind what we might hear from the US. So right now we're sitting in around that 72-cent mark. We might see it go up, we might see it go down, but either way, we are poised into a position where a breakout on either side is potentially possible coming soon. Now, looking at the news ahead of today, Australian Monetary Policy Meeting minutes. We had the meeting last week. We've already heard a little bit detail from their monetary policy statement they released at the time of the meeting. This minutes is going to allow us to see what they'd really discuss in depth. So that's always a good thing to look at down the track. It does sometimes give you a little bit of an effect in market pricing, provided there is something that wasn't quite mentioned in the monetary policy statement that we heard from the meeting before. Now, later today, we also have UK claimant counts, so that is unemployment claims for those of you wondering. We then also have the German zoo report and the general zoo report in general. Now, these zoo reports are about economic sentiment, so they're gauging people's opinions and business opinions of how they feel about the economy over the next 3 to 6 months. And finally, we have a unscheduled release for the Global Dairy Trade Index. This is a very important thing for the New Zealand dollar. They do have a high portion of their GDP based off dairy trade, so the prices that they get for their dairy products are obviously going to be important to them. So keep an eye on that. It does say that it's a tentative announcement as always, and it could be at any stage, but chances are it will likely be sometime tomorrow mid-morning. But regardless of that, because it does say from about midnight, I thought it wouldn't be a bad idea to give you guys a bit of an update on it anyway. Now, if there's anything from today's video you'd like to get in contact with me about, please feel free to shoot me an email at talk2al@acy.com. And don't forget to like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.